Good day, traders. Hope you guys are good and welcome to my channel. In today's video, we're going to be talking about supply and demand areas. So how do you identify these areas or these levels in a mechanical way? Today's video is an extension on a video I uploaded on imbalances. If you're unfamiliar with what that is, please go check out those videos. But then if you are familiar with what an imbalance is and what manipulation is, then this video is for you. So just a quick revision. So an imbalance we know that it means unfilled orders. I'm not going to be going into detail. And then the market eventually tends to go back to those areas, right? The larger the imbalance, the more significant the source or origin of that imbalance. In this video, we're going to be talking about the origin and source of those imbalances. And the source, as we believe that this is where market makers have their limiting orders. They limit orders. And this is what we're going to be talking about today. Let me do this real quick. Right, so what's the criteria that you need to consider when identifying supply and demand areas or potential areas of supply and demand? Number one, which is very important, is a break of structure. So you can have an imbalance that's significant, that's fine. But if that imbalance hasn't resulted in any break of structure, then it hasn't been confirmed as an area of supply and demand, right? That's point number one. Point number two, number of candlesticks at the base origin. So when we talk about the base of the origin, we're just talking about how many candlesticks are found at that origin, right? Now there's a general rule of which I'll share later, because candlesticks that are found on that origin cannot exceed a certain amount of candlesticks. Number three, departure from the source. Now, this we already covered in that imbalance video. Basically, when we're talking about a departure, we're talking about, okay, there was tension in the market, and then there was a huge drop or a huge rise in price, right? So you use the imbalances to identify potential areas of supply and demand, right? But then without these three signs, you don't have a significant area of supply and demand. Check that video out if you still haven't. Sorry. So we talked about ERC candlesticks. We talked about Marubozu candlesticks. And we also talked about gaps. So this has already been covered. Another factor that you need to consider is time spent away from the source or from the origin. I'll get back to that. So yeah, just make sure that you're writing notes, because I know now things might sound a bit vague, but then as soon as we get to the live charts, I promise you that everything will make sense. I'm going to be using the trades that we took on Telegram, on our free Telegram group. I'm going to use some of the setups that I shared there as an example, right? So yeah, break of structure, number of candlesticks at the base, the number of the departure from that source. We already covered that. Time spent away. This one, I feel like we can also talk about the candlestick patterns. The amount of, alignment with high time frames and trend. And then number of retests. So these are the things, sorry about that. So yeah, these are the things that you need to consider, or this is the criteria that you need to use when identifying areas of supply and demand. All right, now we're going to talk about the tradability. In the next video. Because if you understand this, then you'll understand how you find entries on these areas. Right. So, so I said that number one, market or that imbalance, that strong imbalance has to result in a break of structure. Meaning that if you haven't gotten a break of structure, you haven't gotten a potential area of supply and demand. Right? Right. Now, let's look at the source, the origin of that imbalance. The number of candlesticks at that area on those areas should not exceed 4. Right? Because basically we're looking for areas where there's a lot of unfilled orders, areas where the market is hot, areas where there's a lot of resting orders, areas where the market is left abruptly. Most of the times with these areas, you'll find that, let me just hope you guys will see this. The market was going to this area. I'll use sell candlesticks as an example. The market was going to this level, right? And as it was going to this level, as it was going up, it suddenly, you found this. So you're looking for that. You're looking for the amount of orders that were resting here, because clearly the buy pressure that was coming on to this price, certain price range, was so minimal that price with ease just dropped, right? So you're looking for areas where price just went and then turned in an abrupt way. So the amount of candlesticks that should be on the origin should not exceed 4. As soon as you have more than 4 candlesticks, the market will potentially fetch liquidity on that area. The best candlesticks that you will find on the areas of supply and demand are your engulfing patterns. These are top tier, the ones that you will find. Other reversal patterns are second best, but then no doji, because a doji represents indecision. So do not take dojis into consideration. The amount of candlesticks on that, where the price turned, where the imbalance started. We're talking about where the imbalance started. The amount of candlesticks in that range should not exceed 4. Best patterns are the engulfing patterns and reversal patterns, right? No dojis. Hope that's clear enough, right? And then time spent away. So you must at least, from that imbalance, right? The market is going away from the imbalance, is breaking structure. When it goes back to retest, for you to know that, okay, here's where I'm going to take a trade, you must at least have one open, high, close, low candlestick that's consolidating away from that level. Right? So meaning, and I'll draw it. So meaning, if you have this instance over here, let me use a different color for the candlesticks. If you have this instance over here, the market is coming down. Okay, market was going up. I'm changing the scenario now. And then you have this engulfing pattern. And then market went down in an abrupt way, fine, right? But then at the same time, you have the market going back to that source at the same time. This thing is not allowed. As soon as you find this, just know that your zone has been invalidated. Right? So your ideal candlesticks or your ideal pattern is one where the market goes to your area, right? And then goes up with your imbalance, prints a candlestick, spend some time away from that area, and assuming that it breaks structure over here, spends time away from that area, and then comes back. This is a much better scenario than this one. And also with this, the more time price spends away from that zone, area, the better. Now here we're talking about the number of retests, aka freshness. You have your break of structure, you have your consolidation away, right? You have an engulfing pattern, right, before the start of that large imbalance. Now, when there hasn't been a retest, that's when this thing is at its prime. That's when you can find the highest probability trades. So high probability trades is untested, right? The more you retest this area, the less profitable it is. So contrary to what they teach you with support and resistance, that the more the market retests that area, the more significant it is. We already know that when the market is retesting an area way too much, it's generally generating liquidity for large banks. That's when you're going to find the highest amount of what you call of stop hunts. But then with supply and demand areas, because we're looking for areas where after grabbing liquidity, the market will go and reverse instantly, right? The less you find what you call the retest, the better, right? An alignment with the higher time frame just means that if you're in an uptrend, demand areas are the ones that should be of interest. Doesn't necessarily mean that the supply areas won't be profitable, but then yeah, this is for tradability. This goes hand in hand with tradability and not necessarily identifying it, right? With all this, let's go to a live chart. I remember saying I'm going to use the setups that I shared on Telegram as an example. I'm not going to do that. Instead, I'm going to show you guys 3 examples of supply and demand areas using this pair and the DCHF. So first and foremost, you see that there's an imbalance here. Orders have already been filled. Let me do this. But then there's a doji. Okay. The market formed another imbalance here. Now let's look at the source of that imbalance. It starts here. Now let's use all of those other criteria to evaluate whether or not it's valid. Number 1, it's a break of structure. We have the break of structure over here. How many candlesticks did it take to leave that source? Not many. And how's the takeoff? Very strong. Look at the time spent away from this area. Look at the number of candlesticks that are found on this area, right? All of these things are important. And then what happened when the market retested this area for the first time? The market instantly went down. Upon the second retest, we eventually broke it. Now, another thing that you need to know is that when the market breaks through that area, when the market breaks through an area of supply or demand, it automatically becomes invalidated. So what I mean by that is that you need to cancel it out because it's no longer valid. It's only valid if the market hasn't broken through it. You have another imbalance over here. Let's use the matrix again. Has it resulted in a break of structure? Yes, there's a break of structure over here. Okay, how many candlesticks? Not more than 4. Okay, the departure, very strong. The source, let's look at the source, the market, and the time spent away. The market came back here, retested it, went up again. Look at what happened during the third test. Here, the market eventually broke it, right? So the types of supply and demand areas that you'll find in the market are valleys or peaks. These are found at extreme market patterns. You'll find them on a trend. Is when the market is, this is an example of a continuation pattern, because the market was going down, break, found your first sell opportunity, second sell, but then the market eventually broke it after the third test. Valleys and peaks are found at extremes, right? So even if you look at this area over here, this is not a very good example, because why? The market spent time. You already had your first test. This is what I was talking about when I was talking about a candlestick, at least one candlestick consolidating away from this area. You went up, consolidation away, the market came back to retest it, happened again, and then took off. Now, this isn't a very good buy opportunity because of the time that the market spent away. It's not a lot compared to this area over here. But then what happened upon the third retest? The market eventually broke through that thing. Broke through it and formed another imbalance. So those are the things that you need to look at when you're deciding whether or not the market is a very good supply or demand area. Right. Another example of a valley is this one. Now here, the red flag is the amount of time that price spent on this area and also the takeoff. What happened when the market retested that area? It eventually broke it. This is another example of a red flag demand area. Look at the amount of candlesticks. Look at the amount of candlesticks that are found on this space. It's not a very good area. Chances are when the market comes back to retest this area, it will break. Right? So yeah, this is all I have for you guys today. Hope you guys enjoyed it. And if you still want to continue learning more, make sure to subscribe and stay tuned for our other videos. That's all I have for you. Check the links in the description box to subscribe to our channel on Telegram, and also to engage with us. If you need lessons, if you need mentorship, my details will be available in the description box below. But this is all I have for you guys today. Peace.